Okay, welcome to the business of the day. Today we'll be looking at market structure. Yeah, we'll be looking at market structure for today, and we'll be as fast as we can. Now we can quickly make reference to market structure as the roadmap for the market. It could be referred to as the or considered as the roadmap for the market. You see, I keep saying this every now and then. When you are looking at the chart, price can only be doing one of three things. It can either be moving up, moving down, or moving sideways. Yeah. You use the highs and the lows that the market is making at certain level to detect what is expected of the next move. Now, let me start by saying in a bull trend, which is an upward market, a market that is moving up, the market measures on higher high, and higher low. Let me quickly write that out. In a bullish trend, you notice higher high and higher low. So which we'll refer to as HH and HL. Now, there is one thing you will notice from a bullish trend. In a bullish trend, you will notice higher high and higher low. And let's say in a bearish trend, no, okay. Let's say in a bearish trend, you will notice a lower low and lower high, which we refer to as LL and LH. Okay. That is the business of the day. So we are just a step in a time, one step at a time. So therefore, and we have a ranging market. A ranging market is when the market is not making a higher high or a lower low. Then when the market is bound within a range. So let me quickly bring us to a diagram. Let me draw this here. If you see the market doing something like this, for example, okay, let me continue. Something like this. Okay, let me take this off first and do something more, something good. Let me still go with this. When the market is doing something like this, okay, we could say this is higher high. Let's put it here. And this is higher low. So let me no, just a minute. Let me get to organizing it. Just keep your eye on what I'm doing, please. Oh no, well I just okay, let me remove this. Let me just clone it upwards. Okay, clone it upwards. And okay, clone it upwards again. Now, if you're looking at this thing now, this is a bullish trend. Higher high, higher low, higher high, higher low, higher high, higher low, and higher high, and we should say this is a higher low. Now let's look at a bearish trend. So in a bearish trend, we have something like this. Let me go down again. Go down again. Okay, let me just get all this out. Draw something more better. Okay, something like this. So what do you notice? You notice lower low and lower high. Let's clone this downwards, and then let's do that same here. Okay, so now these are the character map of a bullish trend and a bearish trend. But when we say a market is ranging, you will notice something like this in a ranging market. It goes like this. No significant higher high, no significant lower low. But for now, we will actually concentrate on the market structure and how to notice a break in market structure or a change in market structure, which could be referred to as a change of character. So two things can happen when the market is doing something of this nature. It's either it continues the trend or it breaks the current trend, which is referred to as a change in trend or a change of character. So having said that, let's quickly shift this chart so we can draw something here. Let me go this way. Okay, if you notice something like this on the market, high, low, higher high, higher low, another higher high, another higher low, another higher high, another higher low. Now pay very good attention to what I'm about to say. If you understand market structure, honestly speaking, 60% of your challenge in technical analysis has been solved. Yes. Now, this is an uptrend. This is a bullish trend. This is a market that is going up. Now, these are the higher highs and the higher low, the higher highs and the higher low, the higher highs and the higher low. Now, what am I trying to say now? What I'm trying to say is, for every higher high that is being made, it is sustained by a higher low. Now, in a bullish trend, we pay attention, a very good and a costly attention to the higher lows. Let me bring this down and make it straight. Okay, just a minute. Let me make it straight, the coordinates, so you actually get to understand what I'm trying to say. Now, look at this. Let me clone this upwards. Look at what we are paying attention as traders. Let me actually make something here now. And so maybe we went here and now every trader in an uptrend will pay attention to the higher lows. Yes, every new higher high is being sustained by the higher low that made the break of structure possible. Please pay another attention again. As traders, if we want to trade this bullish trend, we should have our eyes here. Okay? Please pay close attention. We'll have our eyes on these levels. Are you getting it? Now, that's why we say we buy low and we sell high in a bullish trend. We buy low, we sell high. We buy low, we sell high. Now, still pay attention. Why is our attention here on the higher low? It's because we always look out for the level that caused or induced the break of structure. Now, for this higher high here, I mean, what did I just do? A minute. For this higher high here, now, okay, please still pay very calm attention. This is very, very necessary. The moment you get this, you've gotten it. It's a lifetime knowledge that can be taken away from you. It's a lifetime knowledge that can be taken away from you. We'll go into the real chart and we'll look at it. Now, we'll always look at the level that inspired the break of the structure. Now, up here, what we'll have here is, this is the neck. We'll call those points break of structure. Are you getting it? This is what we call the break of structure. This is where the break of structure occurred. And we'll do same thing here. We'll say this is where the break of structure occurred. Now, still look at what I'm doing here. This is the higher high. This is the higher low. And the market broke above the level of the higher high. And this is a break in market structure. Now, this high becomes valid. As this higher high becomes valid to trade because of this level here, this demand zone. This level is valid because of this demand zone. This level is valid because of this demand zone. Now, when the market breaks the structure and moves high, we'll wait for the market to retrace somewhere around the neck that broke the structure or the demand zone that broke the structure. Either of these two places will be a very valid place to buy. Again, now, at what point do we say that the buy trend, the bullish trend is exhausted? We say that the bullish trend is exhausted when the market refuses to obey the higher low. That means when the market breaks through the higher low. That is when we start seeing a change of character or a change of market trend has occurred. Change of character or change of market trend. So, COCH okay, change of CHMT. So, we'll say a change of character or a change of market trend has occurred if the market refuses to obey or respect the higher low. Remember, I said every eyes is being placed on these levels. Now, let's say the market does something like this. Okay, let's say the market does something like this. It breaks through this level. The moment the market happens to break through this level, believe me, every trader is going to say that a change of character just occurred. Let me still take this out. If the market breaks through this level now, the moment the market breaks through this level, it will be said that a change of character just occurred. And what do we expect next to do? We will look for the previous level that broke or inspired the change of character. And the level that inspired the change of character is here. So that this place becomes our supply zone. Are you getting it? So this place becomes our supply zone. So what do we watch out for next? Wait for the market to retrace back into that very supply zone, and a sell begins from there. And you notice something, the market, okay, you notice something, a sell begins from there. The market does something like this again. Let me take this backwards. Okay. You notice something, the market does something like this again. Takes out this low. Come back here again. Takes out this low. Goes back like this. Take out this low. So this is what a change of character, this is what a change of character occurred. And traders will be only interested at this level. No. Traders will be interested on this lower high. Lower high. So in a bull trend, we are looking at, on a bull trend, we'll be looking at the lower low. And on a bearish trend, we will be looking at the lower high. That means something of this nature. Let me draw it this way. Let me just draw it here. In a bull trend, we'll be looking at the lower lows, and a break in market structure. That means we're actually moving to a bearish trend. We'll now be looking at the lower highs, lower highs. So let me take this out. Let me take this out so you actually get what I'm doing here. So let's say this is a bullish trend. Our eyes is going to be on the lower low, and in a bearish trend, our eye is going to be on the lower high. Why? If we are looking forward to buy in a bullish trend, we will buying the low and selling the high. And if we are looking forward to sell in a bearish trend, we'll sell around the high, and we'll buy low, sell high, buy low. Now, that being said, let's quickly move into the next thing. So where do we know that a change of trend has occurred? We'll say a change of trend has occurred if, now this is an up market, a bullish market. A change of trend has occurred when the market breaks the lower high. And in a bearish market, in a bearish trend, we'll say a change of trend has occurred if the market breaks through the lower high. Now, please pay attention. If the market breaks through the higher low here, a change of trend has occurred. Are you getting me? If the market breaks through the lower high here, a change of trend has occurred. It means we are, for this one now, let me label this to be A. Trend A. Let me label this one to be trend B. trend B. So in trend A, let's say the market in trend A changed when the higher low broke. Watch the structure here. This is the higher low. So the moment we break through this higher low, we'll be looking at the bearish move, which is now a change in structure. That means we should be anticipating a move of this nature next. Are you getting me? We should be anticipating a move of this nature. And in a bearish trend, the moment we break through the lower high, we should start anticipating a move of this nature. Drawing back here, flying up, drawing back, and I believe that's clear. Now, take note. We said there is a change of structure when the market coming. Let me take all this off. So we said there is a change of structure in a bullish trend when the market breaks below the higher low. Are you getting me? We said there is a change of structure in a bullish trend when the market breaks below the higher low. Let me put out the coordinates, so it's going to be a fine line drawn. In a bullish structure, there is a change of trend when the market breaks below the higher low, and in like vein, in a bearish structure, we're going to say there is a change of trend when the market breaks above the lower high. So in a bearish structure, when we break above the lower high, that's a change of trend. And in a bullish structure, when we break below the higher low, that's a change of trend. We will start looking forward to trade the incoming trend. I believe I've made myself clear as much as possible. So let's look at something. Now, a very good way to spot when the change of character or change of trend happened in the market is to move your chart to a line chart. It's really help. Now, why did I prefer the line chart? Sometimes the line chart only takes into consideration the closing price of the market, but this Japanese candlestick chart, it takes into consideration including the high, the low, the open, the close. But the line chart only takes into consideration the closing price. So let me just quickly jump to a line chart. Now, when you look at this line chart, now you could easily spot the highs, the low, the change of trend, change of market structure. Just go to your chart and turn it to a line chart. You quickly see how clean everything is going to appear to you. Now, a very good way I do this, while I'm on a line chart, I just mark out those levels with a line chart and I will get it back to a candlestick chart. Are you getting me? A line chart, and I'll move it back to a candlestick chart. So you just see what's actually happening, and it helps me to see what's actually happening effectively. So we just lay the foundation for what we're about to be doing, because the next thing we're going to be moving straight into in the market is we'll be moving straight into concept like order blocks and imbalances. So you believe me, you're going to enjoy this very series, because we'll just make sure now, for now, it's not complicated. I've always encouraged you to keep that simple as much as you can. Your ability now to identify the trend and the change in trend now is just a step to the main goal. So a step is actually the right movements in the right direction. So we're actually going to help you in depth to understand the big picture of the market. And the big picture of the market here is to know when to pull the trigger. So the next thing we're looking at is to know when to pull the trigger, having identified the current or the existing trend. I hope I made myself clear. So when to pull the trigger, having identified the current and the existing trend. So that's going to be the next topic I'll be handling in this series. All the best. I wish you the best. A blessed and a peaceful life. Welcome and thank you.